Guys, and welcome back to a brand new video by Vertex Investing. Tan's here, and what I'm going to talk about today is the overall strategy. Now, I realized that because I don't plan the videos, you sort of get information thrown here and there, right? And I realize it's not the clearest. So what I'm going to do is just explain everything so you have it in one video. So essentially, what we're looking for. Oh wait, I didn't mean to have that one. Apologies. What we want, right, is basically we want to break a structure, right? Simple. That's the first thing, and then we want to identify where we want to continue the trend on. Because say that price is already continuing and is in a bullish trend, right? Which you guys should probably understand by now. If not, there's plenty of content out there where you can learn more about understanding trend. But we know that we want to buy somewhere here, right? From here, and in terms of the range, is we know that we form the range from here to here. Okay, so that's the range that we want. Okay, that's our buying range. So now price starts to make its way down. Okay, so what we need to think about and consider is how long. So for example, say price takes, I don't know, say momentum price takes 11 bars to go up. Okay, say if it takes 11 bars to go up, and bars to come down, just to emphasize the point. Okay, what does that mean? What is it telling you? It's telling you that price and momentum is bullish, right? Because price is finding it very easy to go up, but it's struggling to come down, right? So it's telling you that momentum is bullish. So you got that on your side. What else do you need? You also need to understand where another confluence is obviously the premium and discount pricing. So when you're buying, you want to buy below 50%. Okay, we know that. So we know that we want to find a POI now. For us at Vertex, we also look for the most extreme, and to be honest, I recommend everyone does it purely because you get the best risk to reward and you get the best out of the move. However, sometimes you can miss trades, but it is what it is. It's up to you if you want to do that or not. Just make sure that you're buying at discount and selling at premium, right? So let me get rid of that. So actually I won't get rid of it. I'll leave it here so you guys can screenshot this. Okay, so we got this, right? So we know that we're buying from below 50%. Once price comes in here, what do you do? Okay, now that is the question. Now you've got your POI, which is here, right? Say this is, I don't know, say this is the 4 hour. Okay, and you continue in the 4 hour trend, right? And then you probably find, I don't know, you see like a 5-minute POI sitting in there, 5-minute OB sitting there, and you could set an order from this 5-minute OB if you want. However, this is considered a risk entry, and what you risk having is this price comes, it wicks down, and then it continues to go up. Right, so essentially you're better off waiting for price to come. Now remember, we are a trading structure. That is it. The OBs are only entries. Okay, but you still need to understand what causes an OB and what an OB actually is. Make sure you watch the webinar to understand the theory behind an OB. But we know that we want to wait for price to reverse at some point, right? But still keep your overall POIs labeled so you know where price is. So ideally just set an alert at the open of the OB so you know when to be ready at the charts. So what do you do when price gets here? Okay, once price actually enters your POI, why is it not letting me zoom? What the mate, why is it not? Okay, once price comes in here, right, what do you do? So you wait for this, and then you wait for the structure shift to happen. Okay, that's essentially what you wait for on a lower time frame. Okay, so say that this is I don't know, say that this is the 1 minute, for example, whatever time frame you're comfortable with, but you need the structure shift. Okay, and the way you have that is obviously you need a structure, you need a failed structure, and a new structure being formed. Okay, if you're buying, you need to obviously have a high being formed, okay, that breaks structure. You need a lower a higher low, sorry, and you need a new high, okay, and then you can look to enter. Simple as that. Okay, we are literally trading structure, okay, nothing more. That is all. Okay, I did not mean to do that so aggressively, but that is all. And then it's up to you how you want to play the trade, but ideally you want to trade it from range to range, unless you have a reason to think otherwise, that price is gonna start reversing, okay, because it can do. You don't know if it's going to go all the way to the top. Okay, price can just react to a POI here, okay, it can react to an OB here at the top. Oh, come on, man. Price can react to any OB up here and then continue and then start coming down, okay. We won't know that, right? But the only way to consider it is the fact that because the price can change, okay, so that's why it's best to do multi-time frame analysis to understand where it could be. Because say for example this POI, say this is the 4 hour, right, but it touches a daily POI of where price can reverse from and start having a downtrend, right? But for that to happen, we need to have a structure shift. So price, ideally, it can react off anywhere here. We don't know. However, the base theory is the fact that price should go through this, continue through this range, right? But again, you should just be cautious and mark a POI probably at the extreme end of the range, so you know where to look for, right? So let's look at it in a actual scenario. Now this trade is a trade that I actually missed, but I marked out. This would have been the first big trade of the year, but it's fine. If you miss it, it's not a problem. Now I've been over this a few times, I know, but I just thought it's the cleanest example for this, right? So we know that let's go here, right? So we know that we've just broken structure, so we know that the range that we're going to be trading is going to be from it's going to be from there to come on, there we go, from there to there, okay, that's our range, right? So we got POI 1 there and we've got a POI here, okay. Now the reason why I'm going to stick to this one is obviously because of the imbalance. However, price can react off here, but we wait for price and see what happens. Price just taps into the lower POI, okay, it just crashes through and it probably wouldn't give you a shift in market structure, okay. So at this point we are here, right? So now what do we wait for? Because if we count the candles, we know that to go up it took 21 bars. Was it 21? 21. Yeah, it took 21 bars, and to come down it took 31. It's not even there at the POI yet, so it took 31 bars, and we know that we're probably going to start looking for entry. So now what do you do? So alert's gone off, and now that you're looking into your POI, so let's see what happens. So what do we see instantly? We know when price is consolidating. What does that mean? It's building a cause for higher prices, right? Because that's what we're expecting given the POI that we're in, right? But to confirm if price is going to change structure, we need to have a break of a high, right? So we need to have, now you can enter off here if should you wish, somewhere there. I can't really see a clean OB, but say if you took that, that's fine. But it's not confirming that price is going to change in structure, because let's see what happens, it comes down. So that's why we have to be patient, okay, because there's no change in structure shift, right? Because obviously we got these relative equal lows as well, so we should and it actually expands to about here, right? So we should expect price to probably grab this liquidity and then go, right? However, in hindsight it's easy to say, but if you think about it in the real situation, obviously we've got this break of structure, but it's not confirmed without having a new high being formed, as well as a higher low. Okay, so let's follow structure and see what happens. Right, so what can we see here is we create a low, create a high, another low, and now we've broken this high. So we got number one, and then sorry, that was far too quick, and then we broke structure again. Okay, now that break of structure just confirms that there is a change in trend, right? So what does that mean? We can actually enter off this OB here, should you wish. You can refine that even further, but I think a 3 pip stop is pretty solid enough, right? and then let's see what happens. It triggers there perfectly. Now this was the entry. For some reason I was actually watching this trade, and I don't know why I didn't take it. There was no reason for me not to, but sometimes I guess it's good for observation, but it was horrible to just watch it trigger perfectly and go. The reason why we didn't pick for this one, so if price failed to respect this OB, yes, this is a valid entry point. But why didn't we go for this one? Is because that is a higher probable one, because that's the one that caused the newest range. Okay, so that's the new trading range that we're going to be looking for. So our entry point was fine. However, that can just be an inducement. So remember in the previous video where we spoke about liquidity and inducement, this can just say, for example, just tease people in and then crash them through to actually react off this POI. That can happen, right? And it does happen. So just be wary of that. So although we enter a new range, that is obviously your first point of call. But if you have enough imbalance sitting here, price has a reason, like imbalance sitting here and here, price has a reason to come back. Okay, so just bear that in mind. So, and in terms of actually taking the trade, obviously we're going to take that all the way to the top of the range. Okay, but what we can think about is we had a low green trade here and we broke this structure, so price can react to this OB, so we know we should just be a little bit wary about it. But instead price is, it goes to TP anyway, so it hits nicely. And that was what, a 70 odd trade, I think, a 70R trade. It's a 79, so 80R trade on that one. But if you think about it, this is literally all we're trading is structure. Okay, nothing more than that. So let's think about it from this point of view. So firstly, identify your range, right? Which is your trading range. For example, the one that broke the structure from that OB. Okay. Next, identify. Why can't I spell? Did I spell that right? I assume so. Identify momentum. Okay, see if it's in your favor. Okay, that's number 2. Number 3, find your premium or discount pricing, depending on if you're buying or selling. Okay, then you locate your POI, which is your OB. Okay, so you identify your range, identify the momentum, find your premium discount pricing, locate your POI, and then set your alert and wait. What's the next thing? Okay, and wait for shift in market structure. Simple, and that is it. Okay, that is all you need. Just that. Okay, so identify your range. Actually, you know what, I'm going to do that. Identify your range. Okay, we've done that. That range from here to here. Identify momentum. We've done that. We know that 11 candles, a million candles to come down. Okay, find your premium discount pricing. We're buying, so we're going to buy from discount. We want to buy from here. Okay, simple. We understood that. We've drawn our fib from our range, and we know where the 50% level is, and we know when we want to buy from. It's anywhere below here. Locate your POI and your OB. We've done that, and we've actually refined it where we know that price can possibly reverse from. The reason we refine it is to find the last possible reversal point. Okay, then you just set your alert and wait. You just wait until price comes in here. So I set the alert somewhere about here. I waited days for price to come back. Okay, once price came back, you wait for the market. You wait for the shift in market structure, which is literally that. Okay, an example was shown here, and if I go back to that, okay, perfect example. As you can see, low, high, low, high. Okay, sorry, low, low, lower high, new low, high, higher high, higher low, new high, I don't know why I said new high, just say higher high, and then we can enter off there because it's a confirmation of change in trend. Okay, so let's go back to where my scribbles were. So this is literally all you need, right? Identify your range, identify momentum, find the premium discount pricing, locate your POI and OB, set your alert and wait, and then wait for the market structure shift. Just to add, this is going to be on your lower time frame. And so this is your lower time frame, right? And this is going to be higher time frame, and I'm going to write top down analysis. Okay, so you're going to find your higher time frame down. So on this one, for example, as I mentioned in the previous video, you can go to daily to understand what range you're in, right? Because we had a breaker structure which originated from this point to this point, and we just refined that range a little bit more. So your higher time frame should be for your 4 hour and beyond, for your bias and your overall trend, and everything else you can do on the lower time frame. But essentially that is it. Okay, you're waiting for that on your lower time frame. That is it, and that is your shift in market structure. So if you think about it from a logical perspective, like, don't think about it in terms of like pattern or however you want to interpret it, that's fine, but like don't think too much about it, as in be very open-minded, just relax a little bit, don't stress yourself, just take your time and just follow those steps. Identify your range, okay, top-down analysis. Identify the momentum, so make sure it's in your favor. If it's not, then obviously just query it a little bit. Price may not be in your favor, obviously that's fair enough, but that's just a confluence. Identify premium discount pricing, simple. Mark your fib 50%. If you're selling, you want to sell from above. If you're buying, you want to buy from below. Locate your POI. Obviously we know how to do that now. Well, we should know how to do that by now. Well, I would hope. And then you set your alert and wait. Simple. Okay, then you wait for the market, you wait for the shift in market structure on the lower time frame. Okay, remember the fractal nature of the market. Whatever happens on the lower time frame will replicate on the higher time frame. Simple as that. So what I suggest is obviously watch this video over and over and over, just to make sure that you understand what is actually going on. But that is everything you need. And as I said, like, you guys don't need to join the mentorship at all unless you want the support and you want our community, because this is pretty much all you need. Although it's not like our actual, I wouldn't say it's not an actual entry method, because we have boiled it down to having it so rule based, so we take away the emotions from it. But this is essentially the backbone of the strategy. This is all you basically need. Okay, you can be proficient just from using this. And remember, if you don't succeed at first, doesn't matter, try and try again, because you won't get anywhere without practicing. Okay, I can show you all these examples, but the way I see it is very different, because I've had crazy amount of experience to actually understand what I'm seeing. But if you're new, and if you're new to smart money, this is completely new, and it's hard to train your eyes to see this, right? But for me, like, obviously I just see it straight away. Like, I don't even mark the ranges anymore. Like, for example, let me get rid of some stuff. Like, if we just ignore, let's ignore all that. This is literally all I mark. Okay, glad I understand. Let me get rid of that as well. It's gonna annoy me. This is literally all I mark. Okay, so I know that I've got a range. Okay, and I want to look to buy from here. That's literally my charts. Okay, that's all it is, because I already understand where I am in space. I understand what range I'm in, and I know where I'm gonna look to buy from. That's simply it. Obviously, price is not guaranteed gonna react from here. Okay. But I'm aware that this is where I should see a possible reaction point, okay? Because at the moment, price is bullish. I shouldn't be looking otherwise, right? There's no indication that price is going to change, and we can see momentum is bullish. Everything is bullish, right? For GBP USD at the moment, all right? I can't even see, like, it's probably going to go all the way up there. We don't know, okay? But I've got no reason to say otherwise, so I can continue holding. So to be fair, if I got on this trade and I held it, I could have carried on. But to be fair, I don't like holding through pullbacks too much, because imagine, like, you have this move, right? So that was a 250 pip move, Okay, and the pullback was what, 100 and 200 pips. So imagine a 200 pip pullback on your account. For psychology wise, it's very difficult. It's very hard, right? But obviously, if you get a pullback, you know you can look for another entry. But for me, yeah, that was more than enough of a move. But yeah, that's literally all I trade. That's all I mark out on my charts. And yeah, so if you think about it from this point of view, this is all you need. Identify the range, top-down analysis, identify momentum, find the premium discount, locate your POI, set your alert, and sit in your hands. Don't feel you have to be at the charts all the time. I only took one trade this week, and that was that GBP USD that I shared earlier this week in the free group. If you haven't joined the Telegram, make sure you do. There's plenty of free content on there. Our PDFs are there. There's so much there. But it's, yeah, I mean, I'll show you. There's loads. Let me get the free group up. I mean, there's loads of content up here. Our playbook, that's one, that's two. So yeah, you can go through our playbook as well. It's a simple PDF where you can follow a step-by-step guide, but this is all you need. So screenshot this, print it somewhere if you want, but this is all that you need. But for now, I'm going to leave you guys be. Make sure you like and subscribe the video, recommend us to your friends, join our free Telegram, follow us on Instagram, whatever you wish to do. But yeah, take care, trade safe, and yeah, let us know how you get on. Email us, message us on Telegram, Instagram with your trading results, good or bad, that's fine. Because you know we don't always win, and we know that. In fact, like the GJ trade that I took, even though it was like 126, I can't remember, to be fair, 126 R move. By the way, I took partial, so it was about an 80 R return in the end, which is solid. But before that, I took, and I'm sure I posted it here in the free group. Where is it? Nah, where is it? I'm sure I posted it somewhere here. Yeah, here. So I took 2 losses. So I lost 2R there, but then I ended up with an 80R trade overall. The trades combined was 120. It was 90 something, and yeah, it was 92 plus 36. I'm not going to do that math in my head because I can't. So yeah, I did take partials. So yeah, it was about 80R overall. But yeah, so that was a trade. But yeah, you know, we don't always win. We take losses. That is going to happen. But yeah, you just know that the big trade is just coming around the corner. You just have to be patient. Just be patient. Follow your higher time frame bias, and yeah, just wait. But for now, take care. Trade safe.